But for me, if I had to only trade one setup and I had to wait for it and it had to be there in the chart or I did nothing, I would be trading the second stage distribution in my market maker sell model or my second stage accumulation in my market maker buy model. And those moves are the quick, sudden runs, real quick. It's always going to be a low resistance liquidity run, which is why I'm saying that would be my, drug of choice. If I'm going to be saying it like that, I'm going to get my high off of that one. And it happens every single week.
I'm going to show you guys one of ICT's favorite models to trade. It is the second stage reaccumulation or second stage redistribution of a market maker sell or market maker buy model. We'll be diving into a schematic of what that looks like and then a real chart example along with a trade that I took based upon this logic. So in a market maker model, for those that are new, you have an original consolidation, price drops lower, you have a distribution leg, it reaches a level where you anticipate a reversal. This may be a higher time frame PD array, it may be a higher time frame level of sell side liquidity. You get a smart money reversal there. This is when price moves from the sell side of the curve to the buy side of the curve. On the buy side of the curve, you have a low risk buy right here. You have the first stage accumulation, and then you have the second stage reaccumulation. This right here is what we're focused on. This is the model where ICT says that you should see low resistance liquidity runs. Price should just run to the target fast. It's also one of his favorite models to trade. So I'm going to show you guys how I trade this model. There's a few different ways that you could trade it. Some people, they'll wait for price to return into a fair value gap, okay, and they'll just long the fair value gap. Okay, so price will be close to the original consolidation. Remember, this is where you're targeting in a market maker buy model. If you flip this around, it just looks the exact opposite way. So it's the same exact logic here. Price would return into a bearish fair value gap, then drop lower. The target is the original consolidation over here. So you can wait for it to return into a fair value gap, long that, and target the highs. Personally, what I like to do, because I don't like to just blindly long any fair value gap in this price move, is I'll wait for price to return to a fair value gap. And then if we look at this example over here, I'll wait for price to set a low, high, lower low, then a higher high, and I'll wait for it to close above the breaker. So I'm looking for a change in the state delivery or a breaker in here, so it can form an order block with a breaker. I'll look for a fair value gap in this price leg. So if we do zoom in on this over here, okay, so this is the second stage reaccumulation. Remember, price is returning into a fair value gap. Okay, in that fair value gap, I'm looking for a breaker to form or an order block. The order block will always form before the breaker. When there's two of them, it's going to be more confluence there for me. So this is where I will long. Instead of using a higher time frame fair value gap stop, let's say that this is the fair value gap right in here. Okay, and this is the low of the fair value gap. Instead of using that low, I'll be waiting for a change in the state delivery or a breaker. I'll be entering in on this with a stop at this previous low. Then I'll be targeting the higher time frame original consolidation. Okay, so there's two targets you could potentially have here. You could just exit at this high. I'm not always just exiting as soon as it creates a new higher high. That is a partial level though. That's a good level to partial out at. Okay, so that's the first target. The second target would be holding for this high. This is a very good spot for a partial because even if you have the wrong bias, sometimes it will just pop above here and then target lower. If you guys are interested in seeing more content from me, I do have a Discord server, which you can find in the first link down below. There is a 3-day free trial. I do have a 8-video course in there walking you through how to trade ICT concepts from beginner to advanced. I also do share my opinion on where I believe the market is going. I don't live stream, it's not a signal service, but I do share where I believe price is going next, pretty much across all time frames every day when I do see a nice setup. If that's something you guys are interested in, check out that link down below. So this is one of ICT's favorite models to trade. Now I'll be diving into a real chart example on the NASDAQ. On the 4-hour time frame, we had these relative equal lows in here. Okay, I'm waiting for price to purge liquidity to the downside. If you notice, price failed to displace beneath this previous low. If we drop down into an hourly time frame, we saw displacement towards this high. So this is the easy low-hanging fruit target right here. We have 3 relative equal highs. Price is displacing. Price is moving from liquidity to liquidity, which is what it always does. It creates a breaker in here. Okay, so this last up close candle, this is a breaker. Price tapped into it, moved away from it. This up in here is going to be the second stage reaccumulation. So we'll be diving into that on a lower time frame. If I wanted to mark all of this out, this is your original consolidation. Okay, a lot of people think that if you go to an hourly time frame, it has to be in a larger market maker model now. A market maker model can be framed just by looking at a high, low, and then when price runs back to this high right in here, this is a lower time frame market maker buy model, because basically what you have here is you have price moving from the original consolidation to a key level back to the original consolidation. On the sell side of the curve, there will be old highs left behind. On the buy side of the curve, it's taking out those old highs. ICT is trying to capture that last move right to the original consolidation over here, because you will see a low resistance liquidity run, and it's just such a clear setup to trade. Okay. This high started the delivery lower. So I'm looking at that as my original consolidation. Okay, so I'm going to mark out this high. If you look at a lower time frame, let's look at a 15-minute. It doesn't have to be a consolidation. Okay, on a lower time frame, it can be a consolidation. It doesn't have to be a consolidation on a higher time frame. We're just looking where price started the delivery lower and it engineered a little bit of liquidity up here. So we'll look at this as my original consolidation. This is our distribution. This is our smart money reversal. Okay, we have, this would be our green box in here. Okay, and this is our low risk buy. Price trades higher. This would be our accumulation. Okay, and then we have the reaccumulation a little bit higher up. Okay, so ICT is focusing on this reaccumulation, and that is where I focused on in my trade this morning. So let's zoom in on this fractal price action. It is the last move up before price targets the original consolidation. Okay, so I made a post on X earlier. I said there's three things that I look for. I look for a clear level of liquidity / original consolidation to target. We do have that over here. Okay, the second thing I look for is 5 to 15-minute liquidity to be purged. If we look on the 5-minute time frame, okay, this is the fractal of price action I'm working within. And if we look on the 5-minute, it did purge this level of liquidity right here. So it took out this previous low. So after that run on liquidity, I'm looking for an order block or I'm looking for a breaker to form. If we look down to a 1-minute time frame, you'll see over here that price created an order block. So it ran liquidity. We have a nice thick body candle followed by displacement with a bullish fair value gap in here. Okay, so when price returns into that, this is my entry. So where can I target? Well, if I got in as soon as it created the change in the state delivery right over here, if that's where my entry was, I can target this previous high over here. I waited for price to return to the order block and fair value gap again, and I targeted this high. I was not expecting this low to get traded to over here because price already purged the 5-minute liquidity. It created a 1-minute change in the state delivery, and then it returned back to that. Since the higher time frame draw has not been hit yet, I'm anticipating the order block, the breaker, and the fair value gap to act as support and spring price towards the draw on liquidity. When can it do that? At 9:30, it's going to accelerate higher. So that was the framework behind the trade that you saw earlier in the video. Again, I'm looking for a clear level of liquidity to target, or original consolidation. I'm looking for 5 to 15-minute liquidity to be purged, followed by an order block, then a breaker. Then I can take the trade and I can target, where can I target? The original consolidation high over here. Okay, so that is ICT's favorite model to trade. It's personally one of my favorites to trade just because it's extremely easy. Okay, you have a clear draw on liquidity. You're not trying to pick a bottom over here. You're already in line with the trend. You know where price is going. So I do find it to be one of the easier models to trade. That's going to be it for this video. If you guys enjoyed, please share and like, and I will see you guys in the next video.